Welcome to the Smart Money Tribe podcast. I'm your host, Arese. I'm the founder of smartmoneyafrica.org, a financial education platform tailored to the African Millennial woman. But I'm probably best known as the author of two best-selling personal finance books, The Smart Money Woman and The Smart Money Tribe. I love having money conversations that encourage African women to think bigger and become the chief financial officers of their own personal economies. This podcast is a weekly show that will focus on powerful conversations, stories, and practical lessons that teach African millennial women how to make money, keep money, and grow money. So this episode is sponsored by our good friends at OctaFX. OctaFX is a global trading platform with 10 years of experience, more than 6 million trading accounts in 100 countries worldwide. Enjoy the lowest spreads in the industry, buy and sell for the price you see with the fastest execution, and take part in regular promos. Join the community of like-minded entrepreneurs by watching the webinars, reading the market analysis, and mastering a free Forex basic course. Download the app, set up your account, and start trading. Find your bonus for more profitable trading in the link. Hi guys, it's been a minute. So this has been such an incredible year for me. Not because bad things didn't happen, but because there were lots of good things and I learned to navigate the obstacles a bit better than I have in the past. So yeah, I'm so proud of myself. And, the blessings have been immense. Like I've achieved things that I didn't even think, were possible. And I'm just so grateful to God. First of which, the Smart Money Woman TV series debuted on Netflix on September 16th. And in 24 to 48 hours, it was top 10, number one in Nigeria, number one in Kenya, popped up on the top 10 in different African countries. We even popped up on the top 10 in Jamaica, Trinidad and Tobago. We were trending everywhere. It was a big conversation starter for people in terms of personal finance in an African context. And I can't tell you how grateful I am to have an audience like this that is so, engaged. Because I don't know that we would have achieved what we've achieved if there weren't so many people who love the Smart Money Woman book. And yeah, I'm so grateful. I'm super, super, super excited for season 2, which we're developing at the moment. And yeah, it's been exciting times. So I feel like I wanted to share that because it just shows you that your crazy dreams are possible. Who would have thought that I would write a personal finance book, go on a Pan-African book tour, and then create a series that is on a global platform like Netflix? Wild. My university self or secondary school self would not have been able to see this. So let's keep going, guys. I want to encourage you to pursue your crazy dreams, no matter how crazy they seem. So my next guest on the podcast is a super inspiring woman, Tomie Balogun. She created an investment club for the women in TFD series, and I thought what she was doing was super interesting. So Tomi Balogun is a certified financial educator and a leader within the financial education space in Africa. With over a decade's worth of experience across management consulting, telecommunications, and value-added technology, she contributes her technical expertise and extensive experience in creating Fintech products and helping SMEs raise funding in Africa. Under her astute leadership, TGI, a private exclusive club for top users of the 12 app, has grown from 35 members at inception to 2,000 plus strong community of investors resident across 38 African countries. TGI Club has also successfully mobilized $24 million in investments in the capital markets and across multiple sectors such as agro-processing, logistics, real estate development, and consumer lending. TGI Club was also the lead LP on a $10 million VC fund by Lofty Inc., one of the most active VC funds in Africa. Tomie is also the founder and current CEO of 12, a digital wealth app that provides financial education and curated investment opportunities for building investment portfolios. Tomie holds a bachelor's degree in economics, an MBA from Lagos Business School, and alumnus of the Harvard Fintech program. I think that you're going to enjoy this episode because we talk about investment opportunities in Nigeria and also how she basically built her businesses to this point. Enjoy. Hi, Tomie.
Hi, Arese.
It's so amazing to have you on the podcast because you've been doing such great things in the last couple of years, and I'm so excited to share that with my audience. I always like to start by talking about how I met someone first, or how I know my guest. But I think we first met on Instagram.
Yeah.
Yeah, so I think we met on Instagram first, and I was really interested in the stuff that you were doing because I love the idea of investment clubs. And yeah, but I think the first time I remember us meeting physically was probably at the Bambooks, but I'm not sure.
No, I think I met you before then at TFD's house. I think it was TFD's 40th actually. It was kind of like briefly because there are a lot of people there, but I knew that was the first time I met you physically. Then of course, yeah, we met like in person, like yeah, at Bambooks, yeah.
Yeah, at Bambooks. I think maybe that was our first one-on-one sort of like conversation, which is why I remember like more. So tell us about the Green Investment Club and 12Vest. That's new, right?
Well, kind of like been in the works, but yeah, I'll tell you the connection.
Tell me, I love it. Tell us how you got the idea to start the Green Investment Club and how it's grown so far.
Okay, so it's really my personal story, right? I think it was about the time I wanted to go for my MBA. And then, reality just hit like, oh my God, what have I been doing with all my money? I've been working for about 4+ years and not saving or nothing. And, we take it for granted because I was in management consulting. I was doing a lot of economic analysis every day, but I just never thought to apply it to my personal finances. And a lot of career professionals get caught in that circle as well. So it was a wake-up call that, you're about to go for MBA, which was a 2-year MBA at the time, and you're not going to be earning income, right? So what's going to happen for 2 years since you had been saving? And it was a wake-up call. I was subsidized all through my MBA. Don't ask me how, but I got through. But I think that afterwards, I just thought, okay, it's time to get serious. And then knowing the kind of person that I was and I am, I thought it would be good to come together with a group of people where we could talk money, openly, talk about our plans and just, have money conversations and, learn about investing together. So at the time, I did not call it an investment club. We did not call it an investment club. It was more about us coming together to talk.
So was this your friends or just people you worked with? Or how did you pick the people that you wanted to start?
Okay. They were my MBA classmates. Been classmates for 2 years. So we pretty much knew each other really well. So they were my MBA classmates. So 5 of us, we decided to come together as a group. It was later when we started to call it an investment club. I think one of us Googled about it and said, it's actually called an investment club. I said, cool, because we actually registered as an entity. We did all the right things in terms of legally registering as an entity, checking out all our options, signing agreements, setting up the constitution. We did all of that. When you're an MBA graduate, sometimes it's an overkill. But looking back now, I'm glad we did all of that because it taught me a lot. And, we started to, find out how investing works. And I think at that time, that's when I realized that it was not enough to have the money. You also had to learn about investing and investment options because we thought that all we was put money together. And since there were 5 of us, we would have more cash. We thought it was that simple, but it wasn't. And I think it was when we started to lose money that we said, okay, guys, I know. We'll just say, okay, guys, let's put money in the stock market. Okay, what stocks should we buy? Okay, it was very random. Honestly, it was very random.
There was no strategy.
And then
there was no understanding of.
Yeah, we had like goals. I would say that now I would call them goals, right? But in terms of an investment philosophy, strategy, all of those details, So someone would just tell us, oh, there's this business, I think you should put the money in it. And we say, okay, fine, let's put it. And we would try and do some due diligence, but it was just us trying to make sense of how investing works. And when we started to lose money, I think I was the one that said, guys, come, we need to learn. There's no point just putting money down the drain. How does this really work? So we started that process of reaching out to people. And at that time, it seemed like there was really no book to read about investing in Nigeria. Everybody just had this knowledge in their heads. Some uncle or auntie that worked in a securities company could tell you how to invest in the stock market. Somebody could tell you how to invest in treasury bills. I mean, it's a lot better now. There's a lot more access. But back then, 2013, nope, there were no apps. There was nothing, basically. So we had to go learn. And I think I started to blog about it, just sharing my experience. Like, guys, see, this is what happened. We went to a bank to find out about treasury bills. This is the process. I was just blogging about it. And I found that there were a lot of people like me, right? And I started to talk about my investment club as well, what we're doing. It seemed like a lot of people were interested, And that's how the idea came that, okay, why don't you start a community instead of just sharing this openly, right? There's a lot of good information here that people would be willing to learn and pay for, right? So that's how I transitioned into setting up the Green Investment Club. And honestly, at that time, when people reach out to me and say, oh, when you thought about the name Green, was it to do with renewable energy? I said, no, it was just for people green behind the ears. like you're just green, you don't pain, right? That was the idea.
I thought about that, but I don't know. In my head, I thought it had something to do with Nigeria, or something like that. Yeah. That's a good one.
It was just for people that were green, and I think it's an idiom or it's a word used for someone who doesn't know enough about something, right? So that was what it was for me.
Let's learn together. Let's put this information
exactly.
Together for people that are similar. I love it. So when you started and you decided to open it up to more people and create this community, how many people did you start out with, and what kind of things did you decide to start investing in, together? What was the structure?
Yeah, so it's interesting because when we were putting together the report that we released recently, I went back to the very first email I sent out asking people to join me as I wanted to start this community. And when people ask me, what were you thinking? I honestly was just putting it out there to see who was interested, right? Because it seemed like people were reading my blog posts, they subscribed to my emails, and they found it interesting. And I thought, okay, let's try this out. And reading that email now, I'm like, wow, people really had faith in me. Because honestly, I can't say that I knew exactly what I was doing then. It's all been a journey, but I'm grateful for the journey. So I put it out there and 35 people signed up. I still remember the very first credit alert. It was like, oh, wow, someone's willing to pay for this.
So were you
right?
So you were charging a subscription fee to be part of the investment club?
Yes, it was the community-based investment club. So I thought, okay, if I was going to be sharing all of this knowledge, then and doing all of the work, then you would pay.
So how much were you?
Honestly, I think it was 25,000 at the time.
Okay.
Right, it was 25,000, right? And 35 people joined, and I thought, okay, let's see how this goes. And we started the journey, and it taught me a lot as well about how to put together a curriculum plan, because I knew that I needed to share it in terms of a plan, all I had learned. And then I also had to keep them engaged. And then that's when I also saw a gap. I realized that it was not enough to teach them. I had to connect them to the opportunities, right? But, people always try to figure out everything from the beginning. Honestly, I've just figured it out on the journey. I tell people for free that God knows I didn't have this entire plan in my head when I started out. It's just been me identifying gaps and providing a solution to it, really. So when I saw that, okay, we could connect people to opportunities, I realized that was a stronger value proposition. Because over time, a lot of people started to blog about it as well. But the key thing that was different was I had built relationships with investment companies, and I knew I had insights and intelligence to investment opportunities, and I could connect.
even with the work that I do, I find that the biggest gap that we have when it comes to financial literacy and all of that is you read all this information and you're like, okay, how can I invest in Nigeria? Like, what are the actual investment products that are available, or investment opportunities that are available to, the average person? I think that that's what most people want to know. So I think it's genius that you figured that out and, kind of started to bridge that gap. But what kind of investments were you targeting? So was it like a broad spectrum of any asset class that gives us a specific return, or were you thinking about risk or safety and it has to be these asset classes? Like, how did you go about making the investment decisions for which opportunities were worth putting out to the group?
Yeah. So at the time, I was more exposed I knew about the money market and all the instruments in the money market, like treasury bills, commercial papers, and of course the ones that are a bit more long-term in the bond market, and then also the stock market. And then of course, then you had like private businesses, because we had dabbled into that a bit, so those were the options at the time. But it's interesting because I'm saying this in retrospect now, because writing the report really made me think through the journey. And we found out that at that time, there was a lot of innovation around the agri space. So there were a lot of crowdfunding platforms coming up at that time. This was like 2016-ish, and it was just about the time that Nigeria came out of a recession. We had come out of 5 consecutive quarters of economic recession at the time. And there was a lot of innovation. So it was like the emergence of tech companies, and they were all appropriating it in different sectors. So the crowdfunding platforms came up in agri sector, right? I remember the first time I found one of them, I think it was Farm Crowdy at the time, and I reached out to the CEO on LinkedIn and I said, can we talk about this? Tell me about this. And I thought it was genius. And we started to see more short-term opportunities, because as much as we educated people and said, okay, guys, try treasury bills. And funny thing is, at that time, treasury bills were actually good, because I think they were like 18 to 25% at that time compared to now, when they're like ridiculous, right? So, which is another thing I always tell people, like these investment opportunities come in cycles. They don't always stay the same. Because at that time, TVs were like the go-to instruments. The stock market wasn't so interesting. It's only those that really understood it that were interested. And for a lot of people like us, they were just not interested in long-term, like the stock market was just too long-term. So when this crowdfunding platform started to come up, they offered short-term options. So I remember bringing into one of my workshops, I had like physical events at that time, and just to break it down and let them understand the risk, the process, and how it worked. And I thought, guys, I will try this first, my own money. That's because you don't just want to say that, oh, try this when you haven't done it yourself. And then I tried it and it really worked out. It paid off. And I said, okay, you try this, but know the risks associated with it. Because one of the things we had to start teaching them from the very beginning was understanding portfolio building. You always have to have some element of safe options and then some growth options. But at the time, people started to look at, if you look at the typical investment world, growth options would not be like the short-term crowdfunding platforms. But with innovation and tech, those options started to really come up, right? And in Nigeria, because you may find like the agri-tech sector in other countries, it was really Nigeria and maybe some other African countries. But even in other countries, you find like peer-to-peer lending platforms come up. There are just so many other opportunities to invest and in short-term returns. So people started investing in these things, and I think they just got too used to them. So that became another problem. It was more like, oh, why should I do anything long-term when this is paying me off short-term? And, so yeah, I think I'll just stop there so I don't go to...
No, I want the audience to sort of get an idea of the dynamics, that you have to deal with when you're setting up an investment club, because I would imagine that everybody comes to the community with different risk appetites, with different investment knowledge, with different goals. So it'll be interesting to know how you sort of navigated that, because I know the typical Nigerian, right? Let's say the typical Nigerian, when they're investing in something, they only see the upside. Even if you say, oh, you know what, this investment is great, there's some risks involved, but you can get a 20% return or a 25% return. They only hear the return part. They don't hear the risk part. And, a lot with when it comes to financial education and learning how to make financial decisions is understanding risk, understanding the fact that risk is basically taking a bet on a future outcome. And life is such that future outcome may or may not work out in your favor, right? So you need to be prepared, for those risks. But I find that most Nigerians are looking for an investment opportunity that will double their money in the shortest period of time without the possibility of them losing their capital, which in most cases does not exist, right? So how do you deal, sort of sensitizing them to the idea of risk? When money was lost, how did you manage? Because I can imagine that might have been a little bit dramatic.
Yeah, so you're right on the money. People don't understand risk versus return, and how you have to really understand your risk appetite and how you make investment decisions. I think it's a major problem because we really got used to safe, quote unquote, investment options offering 18 to 25% at the time. But that was just the monetary policy at that time to try and encourage investors, and mop up money from the economy at the time. But that was not something that you would, tie in as an investment strategy. So for us, we got our members into that trend of investing short term until saw that was the only thing they wanted to do. In fact, I think that what happened was, 2019, 2020, especially, but even before then, some of them had already started to diversify a bit, but we saw that they were too exposed to a lot of these companies in that sector. And we started to say, look, guys, you need to diversify. You're too exposed. This is risky, right? And then the pandemic came and it was like we saw the future because some of these businesses were really hit negatively and some lost money. And, yes, it was a bit dramatic because one of the things we're very careful about, though, is we're very, very particular about the companies we partner with. And that's because one of the things I learned from the very beginning with my own personal investment club with 5 friends at the time was beyond having a fantastic business model, fantastic business case, and good product or service is the integrity of the person running the business. And these are things that you can probably only learn from experience. That look, it might look really good on paper and even look really good in physical terms, but honestly, if the management or the person managing that person lacks integrity in any way, your money is as good as probably gone. Right? So we're very careful about the companies we select. We do a lot of due diligence on them, ask people that know them, So thankfully, even when there were cases of default, they worked it out. And now, as I can tell you that they've met all their debt obligations. So it was a case of, they defaulted on the debt, but they still worked out plans to pay. That has been our story. So we've never really lost any investment, so to speak, but it's just been a case of default and delay in payments. But I think it taught a lot of people very important lessons that, look, you can't be exposed to an asset class that is that risky and say that you have an investment portfolio. No, that's not an investment portfolio. An investment portfolio has to be balanced, has to include some safe options. A lot of people stopped investing in treasury bills because the rates got really low. But I tell people that, look, you go to the US, it's 0.2%. So honestly, it really shouldn't be high in the first place because it's safe, right? So that has been our experience. And I think especially 2019, 2020, we went full on with a lot of education because we realized that people were not going to get into anything without education. So we had stock master classes on the stock market. We brought in experts, and I brought in people that had been investing themselves, not someone with theoretical knowledge. There has to be a big difference. I met one of my mentors who'd been investing in the Nigerian stock market for about 25 years. And he explained to me how he was able to do it profitably. And I thought, oh, wow, this is interesting. Can you come and teach? And thankfully, we did it at the right time because I remember in 2020 when the pandemic hit and the stock market down, everybody was wondering what's going on. And then we had already scheduled the masterclass. So we held it, thankfully, before the lockdown in Nigeria. And then he kept saying, this is the right time to get in the stock market. We're like, what are you saying? And he was like, Trust me. I remember some people saying, no, this guy already doesn't know what to say. But I thought, you know what, Tomie, this is where you're going to have to put your money where your mouth is. And I remember my husband and I, we said, okay, let's do this. Let's do this based on his advice. And at the end of the year, when we made 120% on the stock market, it was remarkable. But the thing was, it doesn't happen all the time. Because if you tell someone this now, they would expect to make 120% in Nigerian stock markets. But no, it was just because the pandemic hit, the stock market was down. A lot of good companies were selling at a discount, right? And we got in on them. So this kind of things are like once in a decade or lifetime opportunities, maybe, right? So a lot of times you always have to explain to people that you have to understand how investing works and get it at the right time, right? It's not just somebody did it and you're 100%, and that's why I need to do it myself. Do you understand how it works? Invest in what you understand.
What is your model? Do you invest as a group? So if there's an investment opportunity, do you say everyone we're trying to raise, say 10 million to invest in this thing. Everyone bring 1 million or whatever. Or do you bring the investment opportunities to the group and say, well, this is available, we trust it, and then they now use their discretion to invest individually? How does it work?
So it's a hybrid. I mean, from the word go, I avoided taking anybody's money, right? Because we know what that comes with, right? So what we do is we bring the opportunities, but when we do see an opportunity to aggregate funds, basically when we see an opportunity that would earn higher returns if we pull funds together. I think to give specific examples, we saw that when during the MTN IPO, so we're trying to get in on it, and I remember reaching out to the security house, and they said, that they were only working with clients that could do like 20 million or above. And I knew that a couple of my members wanted to get in on it. So at that point, we aggregated funds. I think we did like 30 million in like 24 hours because it was like short notice. And we just moved it to them. They bought it in bulk and then disbursed. Eventually, we did the transfer to each person. And I think in real estate, we've done that as well. When we saw that if we told the real estate developer that we wanted to buy, say, 40 or more or 10 plots together rather than just buying it on an individual basis, we will get a better discounted price, right? So, but at the end of the day, you all still get your individual, like in the stock market, the shares are transferred to each person. With real estate as well, you get to own your individual plot. So we haven't really done joint ownership in terms of assets, right? But it's something that we're about to get into. And it's interesting because that's actually what led to be built in 12est. So 12est was, again, a gap I saw for the members of my community. I saw that anytime we brought in an investment partner or brought in an investment opportunity, they would go on that platform, invest. But for a lot of them, it was hard to stay on top of the entire portfolio, right? Unless for the diligent ones that could keep an Excel sheet or something just to kind of track. And I thought, I myself was having that problem, trying to keep up with all of the different investments, right, that we're having at the time. So I thought it would be really good to have a platform where I could just tidy this up, right? I mean, for the members. So we thought, okay, let's just test something out and let's build something, right? So the name 12 came from like 12 months, right? Every year cycle. We're thinking in terms of planning, like setting goals. So we thought, okay, let's build a platform that would help people set a goal and then watch and be able to fill in the activities, the investment activities as they, evolved in the course of the year. And we built it, tested it out with the members, and we saw that they really liked it, and honestly, at the beginning, my plan was to open it up to the public, but, I'm always very careful to stay on the right side of regulation. So when I reached out to my lawyers and they said, oh no, that you would have to get this license. And I thought, okay, but if I stay as a closed community, it's fine. So we're within the regulatory guidelines. And I thought, okay, let's keep it, especially since with the members of the community using it, it could pay for itself. Right. So and we also started seeing some companies reach out to us to say, we want to fundraise, but we don't have a platform. And that would make it difficult in terms of how you organize, raising the funds, disbursing the funds. And we thought, okay, this is a problem we could solve. And the platform does that as well. So we can fundraise for some private companies that reach out to us. So we've done that for consumer lending companies, for instance, that lend, and we reach out, and then through the platform, they're able to.
What kind of returns do you then get from consumer lending, and how do you vet the private companies that you come for? Because another thing that because in Nigeria, especially when it comes to like investment conversations, people always focus on the extremes, right? So it's either an investment does well, or if it fails, is a scam. But then we also live in an environment where there's a midpoint that people don't like to acknowledge, which is someone can have a really great idea. It could be doing well for 5 years, and in the 6th year, it will go bust because of one regulation or foreign exchange fluctuations, or just maybe a series of bad decisions, and then the business fails. But the intention was not to scam the investors. It was, it just failed. And if you run a business in Nigeria, you know that is a real possibility, right? So how do you vet the companies, the private companies that you decide to raise funds for?
That it's interesting because I was just having this conversation with someone yesterday. I was saying the exact same thing, that we shouldn't be so quick to call people scams, right? Or companies scams. A lot of people actually start out with very good intentions, but stuff happens, because I saw that during the pandemic last year. A lot of businesses had to go through really hard times because of the lockdown and how it affected their businesses. And because, like I said, we worked with those that had integrity, they still work towards meeting their debt obligations. So in terms of how we select who we work with, well, they reach out to us, especially now that people know that, okay, we have a community of people that can raise funding. They reach out to us and we say, okay, tell us about your business, right? We have like calls, digging, and we have the diligence checklist, which we usually ask you to send us like information about your business. We ask for financial statements, but because they are private, you can't really force them to share it with you. Yeah. But if they share it, we review it. But like I've said, this is Nigeria, where everything you see on paper is not necessarily true. So actually, because I built a lot of relationship within some of the sectors and industries, I always reach out to people that I know, that I trust. And say in the agri sector, I reach out to the CEO of the company that I know and say, do you know this guy? Do you do business with him? Do you know people that do business with him? What's the street gist about him? Because honestly, the best gist is what's happening on the street. Forget all that, all that paper, and they'll tell you that, nah, don't touch this guy. And honestly, that has been a lifesaver on so many occasions. I can tell you for free. That's why they tell you that network. I mean, you say it all the time. Your network is your net worth. So important to have this kind of people, and I treasure their relationships because they keep me grounded. So I would always call and say, what do you know about this guy? I was like, nope, his corporate governance is weak. Don't go there. Or no, this guy is a solid guy. Work with him. I know his business. I know how he runs. So that has really helped. So especially in the agriculture sector, where you have all of these crowdfunding platforms, then it's consumer lending. For me, it's very important who introduces you to me, because that tells me about who you are, right? So this particular person was introduced by a member of the club, and like, okay, Tomi, I've done investment with this guy for a while, and I know him. I'd like you to meet him. And on both, in fact, the two companies we work with are introduced by people I really know well, like close childhood friends. So I reach out, okay, let me find out more. And they reach out to me, and when we checked out their model, and I think what I really liked about these companies is their business model, because consumer lending comes with risk, no doubt. Loan default rate happens even with the banks. But what I really liked about their model is they deduct from source. So for the banks, for instance, if you take a loan from a GT bank, they'll take it from your account, and I don't know that with your BVN, they can probably take it if you have another account in another bank that is funded. I think that policy is in place. But with some of these external companies, all you do is probably use a card. And if you do not fund that card, they can chase you from now to forever. If you don't want to pay, you don't want to pay. And I know that for a lot of those companies, they've been going through a lot in terms of getting their monies paid back by people that take loans. In fact, the gist was that some people were calling it government money, right? But yeah, a lot of these taxi drivers, they just download the app and take a loan, and that's it. It's government money. It's crazy. But that's the kind of culture we have in terms of paying back what you owe. But with these guys, what I loved about their model is they have sort of like API integrations, and they take from source. When I say from source, I mean they take it from your salary before it's paid to you.
Oh, from your salary before it's paid to you. I love it.
And I was like, this is genius. This is genius. That was the first time, because I was like, see, I know how consumer lending works. I've worked with one peer-to-peer lending platform, and there was default and there was a delay in payment. Eventually we paid, but it was just not something I wanted to introduce again to the community. But once I saw the model, I was like, this is fantastic. And I like the fact that he focuses on civil service and more like federal government. And federal government does it all salaries, right? And he takes it before it is even paid to you. And I thought, this is fantastic. And we've been working with him for 2 years now, because I remember at that time, I think his total loan book was like 250 million, but now it's in billions, because the members of the community are like, they love him. Like, they love the company. He was at my, the media event as well to tell about how we've worked with him. So when we see models like that, we thought, okay, this is quite interesting. So we always dig deep like that, like really dig deep to understand, how does this business make money? How would this business be able to meet its debt obligations?
What kind of returns? What kind of returns?
Okay, so for this particular company, what we started with was 3% a month, right? And that's because the company on lends at 7.5% a month. It would amaze you that the woman on the street that takes 10,000 Naira does not mind paying 10,750 back.
Wow, that's amazing.
Because for those small amounts of money, 7.5% or 10% is not a lot of money, right? So, I mean, it's for people that have billions, and when you tell them 7.5% a month, they'll scream. But to be honest, for the woman on the street, she doesn't need 10,000 Naira to buy plantain and do her boiling. And when she makes her money, she will pay back the next day.
I love
right?
it.
So they online that, So they online at 7.5, and then they were raising money from us at 3%. Of course, they have to also earn a margin, right? But I mean, now that he has so much money, he's chasing them. They dropped it. They dropped it. I think right now it's at 2%. Yeah, it's at 2%.
So in general,
which is like,
So in general, how you haven't had issues with losing money. There's just been times where it's been slower to recoup than was expected. So what would you say your biggest challenges with building this business in the financial space in Africa has been?
I think number one is people. People have unrealistic expectations of how investing works. I always have to remind them that, guys, this is a long-term thing. Pace yourself. Like this, I want to blow 1 year or 2. Like, forget that thing. That's what you're saying. And I don't know, maybe societal pressure or social media pressure. Like, investing doesn't work like that. When you see people that, you see them in the limelight, they've been building this thing for like 10, 20, 30 years. They didn't just arrive on the scene. In fact, if they just arrived on the scene, then trust me, they're probably going to leave the scene as fast, right? So it's always that realistic expectation. And with good reason. I'm not saying that, because we live in an economy like Nigeria where everybody needs an additional stream of income, right? It's to kind of like live day to day without some sort of additional stream of income. And you also have to deal with inflation, increasing food prices. You have to deal with the Naira losing value. There's just a lot of pressure everywhere. I was speaking to someone and he was telling me that, and that's because he even keeps track, that he realized that the amount he spends on fueling his car has gone up by over 30%. And it's the same distances going, like back and forth.
Everything, yeah.
So it's just a challenge. But even with that, we still have to get them to get their expectations to be realistic. And which is why I love them for the Ponzi schemes, actually. The ones that are clearly Ponzi schemes.
Greed.
It's just that need for.
Yeah, I think greed and impatience, right? Because like I said before, the typical Nigerian is looking for, how can I put my 100,000 in something and it's going to double or triple my money in 6 months and give me a guaranteed return of 60%? Like, I heard there's a headline that's been going around recently about this 21-year-old guy who
I saw that,
who was raising funds I don't know whether it was you are giving people like a 60%, return. And I guess sometimes you wonder, right? If someone's offering you a 60% return on something, don't you ask yourself, like, we live in Nigeria, what business would you do that gives you return of, 60%? So yeah, you're right. I can see how, like, people's unrealistic expectations would probably stress you.
Yeah. I mean, even the Forex deals that went south as well. I mean, it's like, do you know how volatile the FX market is? The fact that a good return in 1 month, there's no guarantee they'll make that same return in the second month. And then the person says they want to give you 25% every month. Like, wow. People don't ask questions. I checked out the guy's site, and for me, I was like, red flags, red flags, red flags. When you say you're running like 6 businesses, I'm like, even one business is tough to run in Nigeria. You're running 6 businesses in 6 different sectors. How? Like, people need to ask more questions. And then another key thing you need to ask is, when you're giving 60% of returns on your business, what exactly are you keeping back to grow that business? Like you're making money and paying out all of your profits. Like, think about it. Like, so those are things that we always have to ask. And for the companies that I work with, we always, and like I always say, you have to understand the business model, because when you dig into the business model, you understand how the company makes money and how they can pay. For the guys that I know, even in agri sector now, that give like 30%, for them, their receivables are in dollars, right? They export, right? So they're actually earning from the devaluation of the Naira, right? So I mean, the companies like that they export and they earn revenue in dollars, you can say, okay, that's why they can afford this.
That makes sense. Yeah. Fantastic. So, do you know the biggest thing right now that everyone that is earning Naira wants to know, right? What are the investment opportunities available that can help you hedge against foreign exchange fluctuations and inflation? Because inflation is super crazy at the moment. It's around 20%. Dollar is now $1 to 400 and I think 88 Naira or something crazy like that, right? So if you earn Naira, where are the investment opportunities that help you, beat inflation or hedge against like foreign exchange risk? I don't have a specific answer to this question myself, but I know that mind. So maybe you can share some ideas.
It's a tough one, right? Because I always tell people that it's not a straightforward answer. There's so many factors that come into it, such as your budget, right? Such as your risk appetite, such as your goals, right? So if you say that, okay, you want to hedge against the devaluation risk, the question is, I mean, in terms of what options are available, off my head, I would say you have the dollar mutual funds, you have euro bonds, you have the US stock market, you have the VC funds, you have real estate as well. But for each asset or investment option that I just mentioned, there's a minimum requirement. I know some of these apps offer you the opportunity to save in dollars, but I tell them that what you don't know is you can't withdraw it in dollars. You're still going to withdraw it in Naira. So, and it is whatever regulation that is in place at that time that will determine what you get your money out as, right? So if you really want to talk about the ones that give you some sort of hedge, it will be probably the dollar mutual fund, and be very careful as well which institution you decide to do it with, because we've done our research and we've seen that some people actually lost the value of their funds in dollar mutual funds. So you have to be very, very careful as well. And the dollar mutual funds are really the options we share, because the minimum for them is like $1,000, right? Mm-hmm. But if you wanted to get into euro bonds, for instance, I know that if you worked into like one of the top asset management companies, you would require maybe like $100,000 or $200,000, right? So what we did in our community was reach out to some of our investment partners and say that, you know what, our members can afford this, or can we aggregate at $5,000 per person? And they said yes. And that really helped, because with euro bonds, you have like guaranteed fixed income, let's say I think the current ones are like 7%, 7.75%. And 7.75% on the dollar anywhere in the world is a great deal. Right? Yeah, it's a great deal. And the fact that we could get it for a $5,000 per piece in terms of units was really fantastic for us and our community as well. So that kind of, I mean, the only reason we could offer that option is because we had a partner that was willing to work with us to aggregate it, right? And wait for individuals to put in 100K or 200K.
Let's talk a little bit about the business model for the Green Investment Club. So with your partners, do you get some kind of commission?
Oh, yeah.
Yeah, okay.
Oh, yeah, that's... yeah, because we do a lot of work in terms of research and trying to create options that work for members. When we do create, or when the partners reach out to us and say, oh, we have this deal, yeah, we earn a commission for raising the money.
Amazing. So how do you see like the fintech space in Nigeria evolving in the next 5 to 10 years? Because lots of interesting things have been happening in that space in the last few years. You hear people raising tons of money, to grow their businesses, and everyone's super excited about it. But how do you see that evolving going, forward?
Well, innovation is here to stay. I think that my only concern would be with the regulatory authorities. But in terms of the innovation, very much needed, very much required. With the payment processing companies, I think it's two big ones that have raised money. I mean, what they do is has enabled a lot of businesses, right? And has really opened the economy. And I always tell people that that's just one aspect of fintech. There's so many aspects of fintech that are yet to grow, but there's opportunity there as well. So for me, when I say fintech, I just see it as tech enabling financial services. So we definitely need tech to enable a lot more financial services, because every economy runs on the ease of doing business, right? So when a lot more small businesses can run their businesses, accept money, and receive payments from anywhere around the world, which is still a major problem. I mean, it has opened up a bit, but there's definitely a huge opportunity. So I feel like there's still a lot to come in that space, especially around wealth management, around consumer lending. There's still a huge opportunity in consumer lending, because lending is actually really broad. Lending is not just the payday loans. There's also mortgage, vehicle financing. There's a lot in lending actually that we haven't even tapped into.
Yeah.
Right. So there are opportunities there as well. I mean, a lot of working professionals that appreciate mortgage or vehicle financing. Why do you always have to put so much money down for everything in Nigeria, right? So there's a huge gap in that space as well, and I feel like fintech can step in. So wealth management, consumer lending, artificial intelligence as well, in terms of building algorithms to help people plan financial portfolios, retirement planning. There's a lot, right? And I've done some study, and when I look at countries like China and Asia, my goodness, those guys are far ahead. US is even backward, honestly. But I mean, US is still innovative as well. But those guys in Asia, my goodness, it's amazing what they've done.
So what are your thoughts on regulation? So the regulation around, because in Nigeria, there seems to be a bit of confusion about how to deal with the fintech space in terms of regulation. And the regulators seem to be trying to, it seems like they're putting policies in place that make it more difficult to run these businesses. So what are your thoughts on that?
Yeah, so I think that the problem in Nigeria is regulation. The regulators just always seem to catch up with innovation. They don't seem to be proactive about it, right? And that's the problem I see. But I have a different point of view in terms of, because a lot of people see it as, why are they making things difficult? I feel like they're actually trying to sanitize the system and make sure that there's some sort of quality checks, so to speak, because really, if you're going to be a financial services or offer financial services in any way, you should have some good stability in terms of your paid up capital, in terms of your ability to your corporate governance, in terms of your ability to meet your obligations. You do need regulation for that, because if you look at countries like America, that's why the government always steps in to bail them out really fast, because whatever happens there will just affect the entire country. when a bank fails, it's people that lose money. When a financial services company fails, it's people that will lose money. So I feel like while I believe that they're kind of late to the party and their approach is probably wrong because they just come in and they just throw a spanner into the works, like they are causing a lot of panic. I feel like their approach probably be more about speaking to them, collaborating, and finding a way to bring innovation and make it work, rather than just stamping and saying this is wrong.
I completely agree with you, because the reason I asked this question is because exactly there are two sides to it. On one hand, I feel like regulators, I don't know whether it's because we have a long history of dictatorship. So everything in this country always seems like it has to be I have to dominate you. So instead of taking the time to sort of understand, the industry and see how it can help move the economy forward and help us, diversify our income stream as a country, right? Is always, if we don't understand it, then we want to shut it down. Like the instinct is to, shut it down, or who are these people that are coming and trying to, do this, new thing. And that is scary because it affects the way foreign investors look at the viability of Nigeria in terms of, is this a country I should be investing in? Even if there are great prospects here, I don't want to wake up tomorrow and find out that a new regulation has, destroyed an entire business that we've put millions of dollars into. But on the other hand, like you said, I completely understand it, because we saw, in the early 2000s, like how this helps to improve the banking system in Nigeria when they increased the paid up capital for banks.
Exactly.
I think it was 25 million or something, and it helped to strengthen the banks, right? So we saw a lot of mergers and acquisitions. We saw a lot of banks just folding up because they couldn't cope. But it made the financial industry or the banking industry ultimately, stronger. And we don't want a situation where like anybody can just wake up tomorrow and say, oh, I'm starting a fintech company, and they can take a lot of people's money and lose it because they don't have the skill set or the resources to make, the business solid. It's just an idea. So there's a lot of fintech firms that I love, but I think that my worry is there are also a lot of them that are cropping up, and it's like, wow, okay, what's the backing, for this thing? Like, and it can become scary. So I think we just have to find some kind of, balance.
I totally agree.
I'm super excited to see how it's going to evolve in the next 5 to 10 years. Let's switch to some personal finance, questions now. What did you do with your first paycheck?
I think I just went and buy some new shoes and new clothes at the time, right? So it was just exciting at that time. First job, first check, and of course, I remember my mom saying you have to pay your tithe, and all of that. But I honestly just remember shopping, right, with the money, to be very honest. And this was, and then like I said, but after the MBA, first job, first salary, because it was more like after my NYC, first job, first salary. That was what I did. After my MBA, first job, first salary. I remember that was when we started our monthly contributions to the investment club. So I basically made investment a deal at the time. So yeah, 2 different paychecks and 2 different skills.
I love it. So how did you make your first 1 million naira?
Honestly, it was the Green Investment Club, right? Because when you work 9 to 5 and they pay you all these things and they pay you all these bonuses, it's more like, okay, you're working, right? But in terms of actually creating a business and earning my first million, it was from starting the Green Investment Club and solving a problem that I saw and having people join over time. Yeah, that's how I earned my first million. So it was creating a business.
How many people would you say are in your community now? So you started with 35, or rather you started with 5 actually. Then
well, but the five stayed on separately. Actually, they didn't come into the community, the Green Investment Club, so separate entities actually. So the
Okay.
five stadium, and there's a whole story on the five. There's a whole story on the five because there's also a lot with evolving as individuals when you start an investment club. It's a
Yeah.
lot. But so right now, I think that today we have 1,800 members.
Amazing. That is powerful. 1,800 members that have the purchasing power to invest.
Oh yeah, average income say 10 to 15 million a year. And you know what's amazing is not all of them were at this point at the beginning, right? We've seen them evolve in 3 years, and it's been amazing.
I love it.
Right now, we have to make our first investment in a VC fund. And I know that 3 years ago, a lot of them couldn't have done it. And that's what amazes me and inspires me every day.
I love it. So what is your personal investment strategy? Like, how do you decide what you want to invest in and how?
So it depends on my goals at the time. Our life, I mean, for me as a woman, especially as a woman, I've come to learn that my life is in seasons, right? So it's very different when you have a baby. Like I have a 1-year-old now, and then when you have children, you have to think, especially in terms of owning assets that earn you cash flow. So for us, our investment strategy has evolved as we have evolved. But right now, it's really more of a focus on one, earning cash flow from assets, and two, hedging against the devaluation risk. So I think those would be my core strategies, and those two factors determine what we invest personally and as a family as well.
Okay, so what would you say has been your most profitable investment?
Well, over time, looking at it in terms of the entire picture, it would be in the agro-tech crowdfunding platforms. The stock market has been good as well, but that's just quite recent, really, because I got in at the right discount. But overall, in terms of comparing asset classes, I would say that it's been the agro-tech crowdfunding platforms.
So, when we talked about investing during the pandemic in the stock market, so did you cash out after your 120% return, or did you leave it for the long term?
Yes. So thankfully, we made a decision to do that. So while we earned that in terms of returns, we did not cash out. But what's good was our strategy was to invest in dividend-paying companies. So they are paying dividends. So in terms of dividend yield, I would say that it's been an average of, say, 21%.
I love it. So you've built these two great businesses and all of that, especially in this climate. We know how difficult that can be. What skills would you say that you've had to build to become a successful entrepreneur, especially in this climate?
Oh, wow. I think that the very number one skill is the problem-solving skill, right? You have to know how to solve problems, right? Because we do have a lot of problems in this country. So, and then don't stop at that. You do have to know how to create a solution you can monetize. Because I find a lot of people, they see these problems, they try to solve them, but they don't really know how to turn it into a business, right? Yeah, it's a gap I see all the time. A lot of times I have to tell people that, you can turn this into a business. And that's because it was my journey, right? Because I think at every step, I'm thankful that I knew or I had people around me to show me how to evolve into making it a business, right? So I think that, problem solving, knowing how to create a solution you can monetize so that it's sustainable, and persistence. Oh my God. Persistence. I mean, it's not easy. Sometimes you just want to throw in the towel and I'm tired. But you need to stay in power then. You need to stay in power. It's not Vince.
I love it. So what has been your biggest money mistake or failure?
I invested in a startup, so we did all of the checks and we thought, this business looks good. Let's put in the money. It was before Uber came into Nigeria, right? And at the time, we had, after the MBA, some of us had started working, and then some of my classmates, they didn't have cars. So they found this guy that could, pick them up from home and then take them to work and then pick them up after work and take them home. And they were paying a fixed monthly fee. And it was so convenient at the time. And everybody wanted to get on the guy's service because it was quite professional. To get there at the right time, take you to work, come at the right time to pick you up and take you home. And you could even pool. And we thought, this is a great business. Let's invest in this guy's business. And we called him, talked to him, and we said, okay, we're going to buy him cars, but let's start with one. So I think we bought it was like 3 million at that time. Bought a car, gave it to him, and started to run the business. And in our minds, we thought, okay, he would just give us post-dated checks to pay back. I think it was in the 4th month, the check started to bounce. I was like, what's going on? And we thought, okay, let's call him. Maybe he's having a soft time in his business. Let's try and strategize, find out how to solve the problem. But sometimes you have your head in the clouds after an MBA. So, and I think it was one of us that started to do some digging, and we found out that the guy was siphoning the funds and using it to do other things. And I remember feeling really bad, but it was a lesson on how, which is what I said about integrity of the person, right? I think that's one key where I learned that look, it's always about the person. Whatever you're doing, you're actually putting your money in that person and trusting that person can build a business with a team, of course, but you always have to be very careful. So yeah, that was my very first big
very interesting. I'm sure we've all been there at one point or the other. But what was your first childhood memory of money?
Yeah, when I saw that question, I thought back, I had to smile because I remember my dad introduced like pocket money to us at the time. I think it was 50 Naira a week. And my sister always like had plans for her own pocket money. Like, when I get my pocket money this week, I'll do this, I'll do that. But it always seemed like when my dad asked me, okay, what's your plan? I had no plans. Just give me the money, right? Mm-hmm. So I remember wondering why he always had to ask what my plans were for the money. Like, just give me the money, and that's what's your, But now I realize what he was trying to teach me. Like, you just have a plan for the money on what you want to keep, what you want to save, and all of that. So that's my first childhood memory. And another memory I have was, I remember at the time, one of my aunts did this Santa socks filled with like sweets and chocolate around Christmas time. And she was like, you know what, if you can sell this, I'll give you a commission. I remember taking it to school that time. I think it was secondary school at the time. And my friends were excited. Santa's the stocking rather. And then it filled up with all kinds of sweets and chocolate, and you could buy it. I think it was 15 Naira a piece. And then I made all the money, and I think one day I just said, let me just spend out of this money. I'll put it back. Oh my God. Now when it was time to give my auntie back the money, it was just 50%. And I remember that she didn't even know whether to be mad at me or to, it was just, I remember feeling so embarrassed. But yeah, that was my first experience in trying to run a business and how I had to be accountable for every amount of money that came into my hands. But yeah.
Amazing. So now that you're an adult, right, what would you say that your guilty pleasures are when it comes to spending?
Oh my God, it's still shopping for shoes.
These shoes. Shoes. When I was in that sort of mindset as well, in university, Sex and the City told me that I loved shoes, and I was always buying shoes until one day I realized that I had a wardrobe full of shoes that I hardly ever wore because
I knew, right?
I don't like to wear heels. It's not something I enjoy. It's not something I enjoy at all. Like, I have to force myself. So if you won the lottery and you won $1 million, what would you splurge on and what would you invest in?
Honestly, right now, I would just splurge on a vacation because I need a break. I just need a break, like somewhere to go to and just sleep, eat, wake up, swim, and do nothing. So that's the very first, like some resort or something. I've literally been watching like YouTube videos on the various resorts around the world with my husband and kids. It's more like a dream right now, especially with all these COVID restrictions. It's like, oh gosh, I don't know what's coming. So I know that right now, that would be the first thing I was on. A trip somewhere and just live life, right? Like, there's so much. I think 2020 really taught all of us to just chill.
Yes.
Life is not that serious. Like, just, live life one day at a time, find what makes you happy, do things, work. Just enjoy the company of your family and friends and just live more in the present, right?
Yeah, one question I would actually beat myself up for. I'll beat myself up for not asking you your thoughts on cryptocurrency. As an investment girl, you know that this is the new craze now. Everyone is crypto mad. What are your thoughts on cryptocurrency?
And the past few weeks, I've got a lot of people crying because of what's happening. So cryptocurrency is speculative, right? It's really more about demand and supply, and especially for some of the top currencies being traded. I mean, there are one or two that have some utility use, right? Maybe like Ethereum or Cold, but I mean, so let me just say that there's cryptocurrency and then there's the blockchain technology, and I'll speak to both of them. Right. So with cryptocurrency right now, a lot of investment analysts around the world and institutions believe that Bitcoin is like a safe haven because they find that it's now become a case of us against the government and financial governments of the world. And a lot of people just see it as something that you can put their money in and not have to go through all of the hassles of moving money around the world. Right. So in terms of it being a store of value, not really, because it's very volatile. So it's quite speculative. You need to understand that the same way you can get 100%, the same way you can lose and like minus zero, right? Like what happened in the past few weeks. Right. So you have to be very careful. And there are many random coins that it makes you ask questions. People are just gambling at this point and just speculating. Right? But what I like about the technology that drives it is actually very innovative in terms of the blockchain technology and the open ledger system. And it will drive a lot of innovation, especially in Africa if they adopt it, right? It has the ability to drive a lot of financial inclusion. Some of the case studies that I've studied is in some South American countries where it was always a major problem to, have money sent overseas, right? Blockchain has enabled that in so many ways for those South American countries, especially where you had people living in rural areas that were not financially included. It has really opened up because someone in the US can just send money via an app that uses blockchain, and then the person gets it in the country. So it does have a lot of innovative use cases, right? And especially for a country like Africa. So that's why I really like the technology that backs it. But in terms of the currency itself, I would say that be very careful. Don't invest money you can't afford to lose. And if it's going to be part of your portfolio, you have to, based on your risk appetite, really consider maybe like 1%, 5%, or 10% of your portfolio. It's definitely something that's here to stay. There's a lot going on right now in the past few weeks with Elon Musk coming out to say that he has environmental concerns about how it is with governments of the world. I think China banned it as well. But I don't think that Bitcoin is going anywhere, right? While the other currencies and everything might begin to like lose value a lot, I feel like the currency itself is here to stay. I believe that, right? I don't know. I mean, I might be proved wrong. I don't see the future. I don't have any.
Personally, are you invested in crypto personally? Like, is this something that you would personally?
To be honest, no, right? And that's because, like I said, for me, when I saw the volatility and everything, I thought, okay, not the right time for me right now. Honestly, my husband invested, right? For me personally, no. But right now that there's been some sort of market correction, I'm actually looking into it because it seems like this might probably be the right time to get into it. But of course, knowing that is money I can afford to lose. So this is not a recommendation in any way. Right? Yeah. So me personally, no.
I think it's very important to know that. Like, it's very important to know that it is speculative. No one can tell this, but there's a lot of information, from experts now that say that, things like Bitcoin and Ethereum are here to stay. But the reality is no one knows the future. We don't know. If you invest in Bitcoin, you're basically taking a bet on a future outcome, which is, that Bitcoin will appreciate in value going forward. And I think like any asset class, what's interesting to me is that like any asset class, you just don't know. You speculate, you make the best use of the information that you have at hand, and you make your decision and hope that your decision is in line with the future outcome. But I think this idea of people feeling like it's a guarantee is what is scary.
Yeah.
But we'll see how it goes. It was so amazing chatting with you, Tomie. I feel like people are going to learn so much from this conversation. And yeah, I wish you luck with the Green Investment Club and 12 Vest. And I hope that basically your community continues to grow and build wealth and all that good stuff. Thank you so
much for having me, Arese. I mean, you inspire all of us, right? I mean, you stepped out to embrace this personal finance world, and you made us see what's possible. So thank you. Thank you for having me.
Thank you. I really appreciate that. You're so sweet.
Thank you for listening to this episode of the Smart Money Tribe podcast. I hope you enjoyed it. I'm super excited about creating financial content for African Millennial women who want to live a fabulous life, but also want to learn how to find the balance between spending on their lifestyle needs and building assets that could protect their financial futures.